Hi, I'm John Prasinos, contributing editor at Aviation Tech Today. You know, I've been covering the nexus of aerospace and Wall Street for more than 40 years. And I can tell you that SpaceX right now is a huge red flag for Wall Street in general and the aerospace sector in particular. Is SpaceX the canary in the coal mine for aerospace stocks? SpaceX has lost roughly 50% of its value from its post-IPO high in just weeks. To skeptics, the rocket company's IPO was a classic pump and dump scheme. Retail investors, enamored of the Musk cult of personality, have been left holding the bag. Musk has said that he will transform SpaceX into an AI company, whatever that means. Those are big words, and so far, little follow-through. But the bigger story isn't just one stock. It's what the decline would signal for the entire aerospace sector. The AI boom has pushed valuations to levels that many analysts say look increasingly detached from fundamentals. At the peak of the rally, just a handful of mega-cap technology companies accounted for roughly 30% of the S&P 500's market value, while AI-related companies drove the overwhelming majority of recent market gains. That's an extraordinary level of concentration with a disturbing lack of market breadth. Meanwhile, the CAPE ratio, or cyclically adjusted price-to-earnings ratio of the S&P 500, currently hovers in dangerously overvalued territory. The bullish case for SpaceX and AI-related investments, it's simple. Spend hundreds of billions today, and the profits, well, they'll come tomorrow. The bearish case is that AI infrastructure spending has become a race, where everyone is spending first and worrying about returns later. History should make investors cautious. The internet changed the world, but .com stocks still collapse. SpaceX is currently losing approximately $13 million per day, translating to about $4.9 billion annually. Why should aerospace investors care? Because if the AI trade continues to unwind, money won't necessarily leave only software companies. Commercial space firms, launch providers, satellite operators, aerospace suppliers, and high-growth defense names could all get caught in the same rotation away from expensive growth stocks. When market leadership narrows this much, reversals rarely stay confined to one industry. SpaceX could eventually prove the skeptics wrong. But if today's AI valuations are pricing in perfection, any disappointment could ripple far beyond Silicon Valley. For aerospace investors, the question isn't whether rockets will keep flying. It's whether today's sky-high expectations can continue to defy gravity. For more on this and other aviation topics, subscribe to my YouTube channel.